My guess is there's more long-term holders. Later, you'll get the FOMO retail of everybody trying to do this. But right now, this is a lot of people like Bitwise, Fidelity, Franklin, everybody going to their client base, talking them through it, explaining it. This is more thoughtful allocation. The other thing that people haven't realized is you can now put it in your 401k. So the average millennial who's a buyer of the NASDAQ or the S&P 500 passive index products will buy this, and they'll buy it every 2 weeks with their paycheck.
We've seen massive Bitcoin ETF inflows. Will we see massive outflows when we reach the end of macro summer, beginning fall? Or will the institutions behave differently this time? Jamie, first of all, is this being driven by institutions? Jim Bianco made the argument that this is still QQQ on steroids. This is weak retail hands, he feels like, and people who are looking for the early gain. He doesn't feel like there's a lot of institutional muscle in this yet, but either of you can disagree with that. But how should we think about this volatility? And Raoul, I know you're always warning that this is an alien asset still, and it's young, and this is part of what you buy into when you go there. But if we're talking about crypto as a possible way to build wealth in the next 10 years before none of us can see the future anymore, that matters to some people, especially depending on your risk profile. Jamie, you first and then Raoul.
Okay, so the market structures definitely change. It changes every single cycle. There's a new cohort that comes in. So there is institutions involved in this cycle. You can see it in the median transaction value of Bitcoin transfers. So it reached a disastrously low median price of transfer level around 7 or 8 months ago. It was around $10. Now that's gone up to 300. It's just one measure. I mean, the price has gone up as well, so you have to sort of disentangle that, but definitely transfer values and the on-chain data is clear. Some of the buyers of the ETFs are institutions. BlackRock and Fidelity themselves are allocating some of their other ETFs, their multi-asset ETFs, into this product, which was always the long-term game plan. And so I think a lot of institutions are doing the same thing. They're thinking about it as the new asset class. I certainly think that is the case. Digital assets in a whole, and I would, bucket that Bitcoin and everything else. But some of the allocations are going into long-term multi-asset type portfolios, which will have they'll have an impact, a very differing impact on the cycles, because the way that they treat those allocations, the way they rebalance based on performance will change, potentially smooth some of the volatility over the long term. But there's still retail there. There's still the same sort of, FOMO activity that we've seen in previous cycles. But I don't think you can say that this is just the same as every other cycle. It's changed.
Wow.
Also, the RAAs do the same kind of thing. It's like they just often will say to their clients, we'll put 1% of your portfolio into discretionary stuff. So that changes. I think they all are aware how volatile this is. It's been sold to them as a volatile asset, and this is a long-term thing. My guess is there's more long-term holders. Later, you'll get the FOMO retail of everybody trying to do this. But right now, this is a lot of people like Bitwise, Fidelity, Franklin, everybody going to their client base, talking them through it, explaining it. This is more thoughtful allocation. The other thing that people haven't realized is you can now put it in your 401k. So the average millennial who's a buyer of the NASDAQ or the S&P 500 passive index products will buy this, and they'll buy it every 2 weeks with their paycheck. And so we will see a difference in the structure of flows, as Jamie's alluding to. It's just going to change. Probably means it's less volatile on the down cycle. It also could cause a full bubble on the up cycle this time around, because you've got numerous new participants who could enter. And, this is a limited supply asset, and 80% of it's hoarded. So it can get pretty tricky. So I don't know how it plays out, but I don't agree with Jim Bianco. I know a lot of purists don't like it because it's an ETF and not people opening wallets and self-custodying. I actually think of it as a Trojan horse, where we're actually teaching people about this product. Before you know it, they understand why they're buying it, and they come into crypto land. So I think it's relatively good quality holders. Also, Hunter Horsley hinted that I think it's on the quarterly statements. You'll see who the big holders of the ETFs are, and he hinted that you'll be surprised who's on the list.
Bitwise, right, Hunter?
Bitwise, yeah.
Yeah. Interesting.
Yeah, I've got this suspicion too, Maggie, that we've already started to see accumulation by institutions at a sovereign level, whether that's sovereign wealth funds, the pensions, potentially nation states. You've got mining operations now in several countries around the world where the countries themselves have co-invested with private mining companies. So, and these are countries that are sort of typically energy rich, and are significant players within that, within the energy markets. And I think they see the world very differently to, Europe or the United States or Western countries. I don't think we'll see any major announcements in the short term. I just think that, my working hypothesis is that they're accumulating. They've got access to virgin Bitcoin through the mining operations. If they foresee a world in which Bitcoin does become significant, they can avoid one of the major steps in disclosing and showing their cards by going to a BlackRock, going to a Coinbase to acquire coins. They have access to virgin coins domestically. So it's just, it's another sign for me that, the game has changed.
Fascinating stuff. And Pluto 5, I think that answers your question. Slimy Tom, I love these handles. Slimy Tom asks, we had a mild for crypto correction. Do either of you think we will face a more substantial drawdown along the lines of the usual pre-halving 30+%?
Doesn't feel so. I mean, Sol did what, 23%? Maybe it makes a new low, could be an ABC correction, or it just forms another little wedge pattern. I don't really have a strong view, but you should just expect 30% as normal course of business. And if you get away with less than that, great. I don't know, Jamie, you got a view?
Not really. I mean, this is I think Pomp said on TV a couple of days ago, this is a pullback for ants. This is a Bitcoin pullback for ants. I mean, it's not even 30%. We should expect 30 to 40% pullbacks in a bull market where we've seen 150% appreciation in just the last 12 months. So it's been a little bit unusual, and that's really the structural buyer of the ETFs that's smooth things out. I follow the derivatives markets really closely, perhaps more closely than I should, given I just got scar tissue from the last cycle, because that was really what brought the markets, undone eventually in Bitcoin. I still think they're going to play a major role. I'm watching it just for the earliest signs that we're starting to see the buildup of concerning leverage and sort of behavior that is toppy in nature. And you still see very high open interest, but the funding rates have come down. Now the funding rates are still elevated. So we do need a reset. We need some of the open interest to go away. We need funding rates to get somewhere back to neutral. But it could very well be that they stay a little bit more elevated because we've got the perception ETFs are there. They're buying every day at 3 to 5 times the supply. I'm fine. I can take this leverage. And that sort of builds in, risks over the long term. But to your point, Maggie, we could pull back a little bit further, but I think, we're sort of at the halfway point in the cycle. I mean, I would just put this little point in as well. There are some indicators, on-chain indicators, which are in the top end of the valuation ranges based on previous history. So if you look at the Pure multiple, which looks at the fee revenue from miners over the last 365 days and where that tends to peak, that's very high, that's very elevated. That's been a very strong indicator of Bitcoin tops. But the difference is that, inscriptions are only about a year old. So that is a new form of demand for block space, which, every cycle is different. So it's changing things a little bit. But you've got some on-chain signs that we're definitely in the sort of second half of this bull market.